Market conditions shifting to mildly bearish. We've got majority bullish at 13 and bearish at 1 on S&P futures. We're at majority bearish on the 1 hour in the futures market. The close on SPX as of yesterday still in the bullish camp, where you've got majority bullish at 14 and 0, majority bullish at 14 and 0 on the closing price activity yesterday. The future market activity this morning could be starting to shift that. When we're looking at those, bullish, mildly bearish, and bearish, essentially it's a combination of these three things. When we have this combination, are we majority here? Are we majority here? And are we green, yellow, or red here? When we've shifted back to red, obviously we're going to be bearish, and all of these others would have also moved back down. They may not be majority bearish, but we're watching some of those things as, are we getting additional confirmation that we're trending higher, or is that starting to soften and starting to weaken? So we have a couple of little transition zones there where you have bullish, mildly bullish, where things are starting to shift a little bit. And so we're starting to see that mildly bearish state where we're still in a bull market, but we're starting to weaken back to yellow. We've got majority bearish here, so there's some bearishness that may not hold, and we may see this support. This still has kind of a bullish tone to where you could get this higher low, some resistance right here. There's lots of resistance now. We're basically haven't moved at all in 3 months since November. The price in November is the same as it is right now on S&P 500. So relatively flat consolidative trend at the top end of this range, and we're at all-time highs and historic highs as well. And I've mentioned this price pattern before. When we have a really expanded trend on the weekly time frame of S&P 500, we're looking for compression and expansion. And when we get to these expanded states, similar to this one a few years back, they're just not sustainable, and we can kind of trudge along here for months at the upper end of this range, and starting to get kind of that vibe here with S&P 500 currently. That's the weekly time frame on S&P. Let's jump over and look at breadth. The other factor that we have on breadth is, let me slide over here, is that we're getting back into this compressed zone here, and this downtrend still could be in place for breadth. Remember that breadth is just, in this case, the number of stocks trading above the 50-day moving average in the S&P 500. That's sitting at 49. So we're at 50-50. Really, the market's tug of war right here. We're not extreme at the 80 and 10 range. We're just stuck right here in the middle, yet we have this bearish tone on the trend where we have been at before. We'll keep an eye on that and see if that adds to that 50. That's certainly not large confirmation, large participation in the most recent rally. Would like to see that a lot higher. That could be an indication that we're just not getting real firm participation in this rally. We are seeing bearishness here in the VIX. It's kind of just dancing around here around that $16 range or 16 range, and you're seeing a little bit of pop here yesterday. VIX is really volatile, doesn't trend. It just moves up and down essentially. So it's more about where is it at? What range is it at? We're at 16. It can go down all the way to 12. Really not a whole lot happening here on VIX. SHY, we take a look at the short end of that yield curve. This is short-term bonds, and we're seeing that downtrend we've seen in bonds. Making an attempted rally here, but starting to weaken back again on this hourly chart. TLT also has been working on this rally as rates are trying to drop. That 2-year rate is, you can see now, starting to tick back up again. Majority bullish on the 2-year at 429, and the 10-year is also here now on the 1-hour time frame, getting some strength here. So we're getting rates that are moving back up here in the last day or two. We'll see what that, how the markets interpret that. Have a still relatively flat yield curve, 429 and 450 on the 2 and 10 year, not inverted, but still flat. Would like to see the short end of that yield curve come way down. We want to see that 2-year really drop. I'll keep an eye there also. Dow Jones Industrial Average, majority bullish on the daily and 1 hour. Triple Qs also a majority bullish on the daily and 1 hour here also. So this actually is a really tight consolidation bullish pattern when you have a higher low than this low, and you're just kind of hugging that upper range. And we'll see if we can press up that area and get a breakout on triple Qs as well. All the markets have that pattern as of right now, and The Russell 2000 also showing some strength here in the shorter term, majority bullish on the daily and the 1 hour. USO getting some strength here this morning, bouncing off of that 50% retracement. We've talked about that the last few days. It's just been sitting right here, seeing a little bit of move in the shorter term 1 hour trend. You can see that yellow line gapping up on USO. Gold, GLD. The GLD is the ETF for gold. USO is the ETF for oil. If you don't want to trade the futures or can't or don't know how, this is just an easy way for you to be able to trade oil and gold in any brokerage account. GLD, expanded trend here. We talked about this now. When we have this expanded trend, it's a 1 hour time frame. We have that back here as well. You get that consolidation. It compresses. That trend's compressing. It's breaking out. Now you're getting that expanded trend. Those are areas where they become decision points. When you start to get really wide like this, those are not sustainable. If you're in the trade, you could say, hey, maybe now is a chance to take some off the table, or wait for it to retrace or adjust stops. They become decision points at these narrow ranges and these wide ranges. Also, let's jump over and look at silver, where we're seeing some continued strength there, and again on that 1 hour time frame, a little bit of a softening. A couple of stocks for you to consider today. Rocket Lab, which has been a real big high flyer here the last few years, getting some support and a confirmation bar at the 236 location. That is in the aerospace sector. And one other stock that has also been very interesting is ACHR. Nice confirmation bar, increasing volume here as well. This is in the urban taxi space, where really not grabbing on quite yet, but we're headed that direction. Essentially, these larger drone type helicopters acting as urban taxis, and there's some interest there for sure, and that is an interesting stock as of today, with a confirmation bar, could be moving back into the momentum zone. Keep an eye on that. That momentum zone is when you're connecting this low point, this high point, and then you get this upper Fibonacci level. Okay, all this blank space right here, this is the momentum zone, and we want to see stocks in that range and ultimately continuing higher. So it's not quite there yet, but a little pop up above that could be a good confirmation entry with, again, risk management, stop losses, trailing stop losses down below the confirmation bar, or when you really have all of this price activity, if we can push up through that, a stop loss below that and trail it higher going forward for that. So that'll do it for today's update. Everyone have a fantastic day today.